What is asset location? To understand asset location, it is important to understand two areas first: asset allocation and how investment accounts are taxed. So let's start with the first. Asset allocation simply refers to the way assets are mixed and mingled. That is, what percentage of your account gets invested in stocks versus bonds versus real estate, as one example, or in high-growth stocks versus income-producing bonds, as another example. Moving on to the second, investment accounts and their taxation. They are generally taxed in three different ways. There are tax-free accounts, such as Roth accounts, tax-deferred accounts, such as 401ks, and taxable accounts, such as brokerage accounts. Now let's get back to asset location. This effectively means choosing an account with the most favorable tax treatment for any given piece of your asset allocation. High-growth stocks and mutual funds, for example, are well served being located in a tax-free or Roth account, while income-producing bonds are better being purchased in a tax-deferred account, such as a 401k or a regular IRA. While what you make on your investments is certainly important, what you keep is even more important. So having investments in places where they receive the most favorable tax treatment allows you to keep more of your hard-earned money. This is the overarching reason to use asset location in all of your investment decisions. And if you'd like to learn more about your own asset location situation, contact Pure for a free tax analysis.